Welcome everyone to our webinar for today. Our financial management topic for today is going to be small business budgeting, managing income and expenses. Thank you to each one of you for joining us for today's presentation. And thank you to the team at Bank of the Sierra for your time and your commitment to making this a great, successful webinar. Today we will be going ahead and use the chat box features. For those that is your first time joining the Zoom platform, you can locate that chat box on your computer screen. If you're using your computer, simply select the chat box option that appears right there. If you're using a tablet or mobile device, select the three dots where it says more and then select, I know here, language interpretation, you want to select chat box. So chat, that way you can answer your questions, and we'll be having some time at the end for a live presentation. This is what our agenda looks like for today. And my name is Sandra Video, as mentioned. I'm the Business Development Officer here at the Fresno Area Hispanic Foundation. And we have a great team that's joining us from Bank of the Sierra. We have Paula Gagnier, who will be our facilitator for today. We have Mark Bernal, Luis Neri, John Jimmy, Michael Ward, and Miguel Flores. All of them will be providing their expertise in this subject, this important subject matter, and we'll be having some time at the end of the presentation for a quick Q&A. I want to take just a few seconds just to tell you a little bit more about the organization. The Fresno Area Hispanic Foundation is here to help and support entrepreneurs during their business journey, existing businesses that are looking to recover from this pandemic. We have our technical assistance program where we provide one-on-one business assistance with getting started with your permits, licensing, if you're getting a startup business, or perhaps you're looking to expand your services, looking into other markets. Our team of experts are here to help and guide you through the process. We also continue to offer our weekly webinar presentations, different topics in finance, marketing, legal, and also our Womanpreneur, Latinapreneur program, which is dedicated for women entrepreneurs. So if you're interested in that program, let me know, send me a private chat. I'll put my email in the chat box as well. That way we can share with you information about our upcoming cohorts in the year 2022. And lastly, our organization, we are a recognized financial institution here throughout the nation, and we have different microloan programs available for individuals, not just for startup businesses, but also consumer lending. We started a new program on the consumer loan side. So we have a variety of products that we can share, connect you with, and of course, we can always assist you with accessing other types of capital funds. Our contact information is there on the screen, as you can see, and I want to remind you that today's presentation is currently being recorded, and all participants that register will be receiving a copy, a recording of the video, and we will also be uploading it on a private YouTube account. With that being said, it is now a pleasure to introduce you to Paula. And Paula, you let me know if you want me to moderate the slides or if you would like me to make a co-host for today's presentation.
Sure, I can, if you make me the co-host, in that way I can go through each slide for each section that our team members can go through.
Okay, perfect. Sounds great. Well, thank you. And I really want to say thank you to Paula. It's been a wonderful connection that a relationship that we've been able to create between the team at Bank of the Sierra and the Fresno Area Hispanic Foundation this year. And we're looking for more collaborations and really empowering our small business community here, not just in Fresno, but throughout California, throughout the nation, on the importance of financial education. So thank you so much, Paula, for your time. And you should be able to share your screen at this time.
Great. I really, really appreciate you, Sandra, for putting this all together. And we are very excited about this particular subject matter. I think it's one of the most important subject matters that even if you have your own business or you're thinking about your business, this is really the first step in getting organized to ensure that you are successful in managing your business. So I'm going to share my screen really quickly. One moment, we're trying to see how to share it. There it is. All right. Okay. So the first thing we would like to first start off with is the check your knowledge form.
I want to check. I believe your screen exit out.
Oh, it did? Okay, let me see if I can share it again. Share. Okay, can you see it now?
Yes, perfect.
Okay, great. Great.
So you could, I think on the bottom icon for the full screen. The presentation slide icon. I know it always gets me too. Like which ones?
And it's on the bottom. Let's see.
Yeah, it looks like a presentation screen. A little bit to the left.
Let's see. Oh, let me go here.
Paula, if you hit the play button, yeah, there you go.
Oh, I'm trying to move this thing out the way.
Oh, right above design, there's like a little
Uh-huh.
box with the play button in it. Yeah, if you hit that one, it should go to. There we go.
Got it. Okay. Thank you so much. Okay, great. So one of the things we would like to start off with is the participation worksheet. It's a survey to really test your knowledge on what you know about financial management at this time. And we're after this Great, thank you so much, Sandra. So yeah, we want to refer you to the Check Your Knowledge list of questions for you to think about. And when we were done with the workshop, at the conclusion of the workshop, we'll go back and look at some of the answers from that particular test. So without further ado, we're going to go ahead and move it over to Mark Burnell to kick off this training. Thank you.
Thank you, Paula. And I'll let you know when I need you to change slides for me, if that'll work out. So first, again, I would just like to say thank you guys for joining us today and giving us the opportunity to spend some time with you, sharing our experiences, maybe some of the observations we've been able to make, and also our expertise with entrepreneurs like you. As Paul said, my name is Mark Bernal. I am a regional branch administrator with Bank of the Sierra. I've been in banking for about 20 years now, and most of my experience has been in the branch setting, working with primarily business customers. In my experience, what I've been able to see is that successful business owners tend to have a really solid understanding of the most important facets of owning a business. And the subject of today's course, financial management, is really and certainly one of the most important facets of owning a business. But to sort of set the stage, just wanted to ask a quick question to you guys. How many of you have ever heard the saying, experience is the best teacher? Well, probably you all have, right? I know I have. But I have another quote that I would like for us to remember. Experience is a brutal teacher. First, it gives you the test, and then it teaches you the lesson. So I think this quote really illustrates the point of taking this course. We're going to learn about financial management for your business, and it'll help you learn skills needed to build a stronger business while being able to hopefully avoid learning lessons the hard way, right? All right, so to get into it, we have the agenda up on the screen here. As you can see, we have a lot of subjects to cover, but due to time constraints, we probably won't be able to cover all of them today. However, as it's been mentioned, you should have received a copy of the participant guide. And I encourage you to take the time to review this participant guide in depth later on. It contains a lot of valuable information for you that will help you get a strong understanding of financial management in general. Also, make sure to pay close attention to the resources that are listed in the for more information section of this guide, because there's a lot of helpful tools and other resources that can help you have a successful business. All right, so what are we going to learn in this course? Paula, if you wouldn't mind going to the next slide. All right, here's some of the learning objectives. We're going to learn about the concept of financial management and why it's important. We will review several of the essential practices in financial management. And then, Paula, if you can go to the next slide. We'll also learn about the basics of financing for your business, whether it's financing startup costs or financing your working capital or financing to be able to purchase fixed assets such as equipment or other things of that nature. But before we get into the presentation, as Paula did mention, please take a moment to complete the what do you know about financial management questionnaire, which is again on page 4 of your participant guide. After we complete this course, go ahead and come back to that questionnaire and then complete the right side of it, which will then help you understand, or I guess identify, better said, what areas you're still maybe a little unclear about, and then you can spend more time studying those topics later on. Really, a little bit of effort that you put in now is going to pay off for you quite a bit later. Paula, if you wouldn't mind going over to the next slide for me, and then one more. Perfect. All right, so let's go ahead and get into it. So what is financial management in a business setting, and why is it important? If you turn to page 7 of your guide, and please mark this section because it's an important one. We're going to have a lot of information there for you. But in general, financial management is really the practice of handling a business's finances in a way that allows for your business to be successful. It's really the best way to get information about your business that will help you make important decisions and reach your goals. Financial management includes many practices and tools such as bookkeeping, which is probably the most important practice and principle in financial management. It also includes preparing and analyzing financial statements, obtaining financing for your business, and even something as basic as creating a budget for your business. Now, why is it important? Well, it will allow you to know if you're truly making a profit. Financial management will. It'll also help you make decisions about what your business can afford. And it'll give you the information that you need for a host of things. For example, it'll help you set prices and determine which product lines or services are profitable and essential to your business. And it'll also help you understand which products or services maybe you should avoid. Maybe they aren't profitable for your business. Also, what if your business needs to grow and you need to finance that growth? Well, again, the practices and the tools in financial management will help you know exactly how much you can afford to borrow. In summary, quality financial management will give you the tools and the information you need to plan for growth, set goals for your business, make plans, adjust your plans, and keep you on the right path towards reaching your goals. So very important indeed. We can really understand that now. So let's go on to slide 7, please, Paula. Thank you. So now we have that basic understanding or that overview of what financial management is, and we're convinced about its value. But where do we start? Well, the best place to start is with budgeting. That's really step 1. And much like you probably already do for your own personal expenses, a budget for your business is basically a list of all the expenses organized by categories. And also, it's also a plan for how you're going to use your resources, how you'll spend your money, so to speak. Now, maintaining a quality budget will help you first track all of your expenses and organize them into yearly or monthly categories so you can kind of know what to expect, maybe do a little planning for the future. It'll also help you understand if you need to cut back a little bit, perhaps use your resources differently. It'll help you plan for growth, and it'll help you also make a profit, which is ultimately the most important thing, right? Now, once you make your budget, you then use it by comparing it to your actual expenses. And you get to see if you were able to actually follow your plans, if you need to make adjustments, and again, make adjustments to your particular budget or to your plans for the rest of the month or year, depending on how far ahead you're looking. Now, as a question to those on the call today, how many of you are already using a budget for your business? Please feel free to either raise your hand, or maybe if you can raise your hand in Zoom, which I don't think you can, or just put it through in the chat if that's easier for you. Okay, awesome. So it looks like we have somebody who is already using a budget for their business. That's excellent. If we go, Paula, if you wouldn't mind going over to slide 8, thank you. And for those of you following along in the participant guide, if you can go to page 8 of your guide, you'll see a sample budget there. Now let's take a few minutes and take a look at the categories. Look these over. Are any of these categories applicable to your business? If they're not, have you perhaps, by taking a second look at them, should they be? Or is it something that maybe you just haven't thought about that is needed for your business? And maybe Maria, I hate to put you on the spot here, but you responded that you do use a budget. If you feel comfortable, would you like to share how using a budget for your business has helped you?
Maria, you are able to unmute yourself at this time. Thank you.
Well, that's okay. If we can't, I know I just kind of put you on the spot there, but definitely, much like you probably used it for your own for your own like personal life, personal expenses and planning, having a budget will help you anticipate expenses. If you have maybe a large expense that's going to come up for your business every year, let's say taxes, maybe you could start planning for them and budgeting for them each month early in the year, so that when that time comes around, you have resources in place, or you at least know what you're going to do and not having to scramble. As we also just talked about, using a budget will help you track and avoid overspending and exceeding what your business can afford, which is especially important during the initial stages when you're first starting out. And again, it'll help you to plan for the future and stay on track with your goals. But with all this information about budgeting, you might start to wonder, well, in practice, how do I actually keep track of all my expenses and all of the income that's coming in through my business? What do I need to keep track of? Should I include my personal expenses in my budget, or should I just focus on my business expenses? How do I keep it all organized? Are there any tools that we have available that can help me with this? Well, that's what we're going to talk about in the next section. And for that, Paula, I'll hand it back to you so that we can move forward with that.
Thank you so much, Mark. And so we'll move on to John, that will provide us some information regarding bookkeeping. And John, you're,
Paula,
now you're on.
I was
Hi.
presenting I was presenting the cash flow statement.
Okay, let's see. What do we have for 1 moment? I'm sorry, Louis. Louis, are you on the line? I thought I saw him. Maybe he's muted. Let me see.
Hello? Hello?
Hi. Hi, Louis.
Hello. Can you guys? Okay. Let me make sure. All right. So, yes, I'm in charge of bookkeeping. The
Great.
slide presentation
Okay.
part. All right.
Okay.
So my name is
Thank you.
Luis Finetti. I go by Louis. I'm a financial services representative. I've been with Bank of the Sierra for going on 6 years. I've actually had some banking experience going a little bit over 10 years. So I'm very familiar with the new account process, being for consumer or for commercial as well. So I'm gonna talk a little bit about bookkeeping. So we can go ahead and go to slides, I believe 9. Okay, awesome, there we are.
Or 10? Or,
All
I'm
right.
sorry.
No, 9,
Okay.
please, thank you. All right, so bookkeeping is the organized process of tracking all income and expense transactions. Bookkeeping is a critical component of financial management which leads to better business decisions regarding financing, taxes, owner's draw, and retirement. So you want to go ahead and keep track of all these expenses and all. So yeah, perfect. Next slide. All right. So with that, here's some 10 basic bookkeeping steps. Number 1, obtain a business accounting software. Proper software selection is critical for success. Number 2, open a separate business checking account. Do not mix business and personal checking accounts. This is where I can help you out with where I can separate your personal and your business accounts. Number 3, reconcile your checking account. Each month, reconcile your account using business accounting software or cloud computing reconciliation process. Number 4, you want to track sales. Create an airtight system for tracking sales using tools such as a register tape, invoices, and a sales book. Always use this sales tracking system. You want to keep track of everything. All right. And number 5, deposit all sales. Using the duplicating deposit slips, deposit all sales in your business checking account. Alternately, remote deposit capture, or RDC, may be available for depositing checks. Total sales should equal total deposits. Do not spend cash sales. Link all forms of sales documentation, such as invoices, cash register tapes, and sales books, with a specific deposit. Next slide, please. Number 6, you want to write business checks for all business expenses or use a business check card. Do not use petty cash system until you are experienced at bookkeeping. Number 7, you want to obtain a separate business credit card. Do not mix personal and business expenses on one card. Number 8, you want to pay business expenses first. Most businesses start out as a sole proprietorship. In sole proprietorships, you, the owner, do not get a salary. Rather, you take an owner's draw. A common question is, how much draw do you to take? Here's a rule of thumb. Sales pays for business expenses first, personal expenses second, and then number 9, you're going to run a profit and loss or P&L statement. A checking account balance is not a good indication of how much profit the business has made or what amount is available for owner's draw. A P&L statement can provide a better picture of the financial health of the organization. Number 10, pay yourself with owner's draw. Owners should pay themselves by writing a check, making an electronic transfer from the business account to a personal account. If you're a sole proprietor, assign those draw checks to an equity account called draws. And then that is my time, our presentation.
Great.
Thank you.
Thank you so much, Louis. And so we'll be moving on to John. Actually, Mr. John. Yes, I'm going to go to slide 16 for the financial statements cash flow. I believe you're muted, John.
Can you hear me?
Yes, thank you.
Hello? There you go.
Yes, we can hear you.
Okay, just a moment. For some reason, I had exited full screen. There we are. Okay, well, I'll be discussing cash flow. My name is John Jamai. I work with Bank of the Sierra. I've been back with the company for 3 months, but I've worked a total of approximately 8 years total with Bank of the Sierra. My title is a senior credit analyst, and so my responsibilities are to take financial statements that Luis was talking about and analyze those to try to boil down what the cash flow is. The income statement is going to include a lot of financials, expenses that might not have an exact impact on your cash flow. And so I'm just going to be discussing what is cash flow, talking a little bit about a cash flow projection, why we need them, and what they can help you with. So first of all, to get started, But what is cash flow? There's two primary definitions for cash flow. First of all, is this the balance of cash received less the amount of cash paid out over a period of time. The second definition is that moving cash in or out of your business. So the flow of cash coming in or out, that would be your sales minus any operating expenses and then non-operating expenses. It covers from one period to the next and gives you a detailed information on what you're receiving that you can use for other expenses, particularly draws at the end of the year and such. On page 16, oh, you're already there. On page 17, on the next page, we discuss cash flow projections. A cash flow projection is similar to a budget. However, again, it boils down deeper to what actual cash you'll have available to service debt or cash reserves to put into your business through the next year. And the cash flow projection is a financial statement using assumptions to forecast. So it might not be accurate. There's going to be some changes throughout the year. The example that is given, that we'll look at in just a second, is a monthly cash flow that allows you to make adjustments. So if you have any unanticipated expenses, or if you have situations which we had experienced over the previous years with COVID, really put a wrench into a lot of businesses where they had to take on more expenses for PPE and things like that. But a cash flow budget will allow you to know exactly where your cash flow is and what modifications you can make if needed to get to where you need to be. A cash flow projection, it helps you understand the company's cash flowing in and out. It allows you to plan for future cash flow needs during a specific period. Many of your businesses might be cyclical, so this gives you an opportunity to evaluate if there's going to be any changes or perhaps the need to increase sales or to reduce expenses. Cash flow projection will also project whether cash receipts, the inflow of cash, will be sufficient to cover projected cash disbursements or cash outflows. And that will play a significant role when you do reach out to a bank to secure a loan. They're going to want to see that you're profitable, but they're also going to want to see that you have sufficient cash to be able to manage the debt service that will be incurred once you receive that loan. Okay. On page 18, we see, or we'll answer the question, how can cash flow projections help your business, and why or when will you need them? A cash flow projection is a great tool for setting sales goals and for planning for expenses to support those sales. Secondly, a related use for a cash flow projection is to determine your break-even point during a startup or an expansion phase. So when you take on additional expenses, or when you expand or perhaps relocate to a larger facility, a cash flow projection will allow you to understand that you'll be able to take on these additional expenses as you scale up and still break even. This was extremely important over the past year when a lot of banks began to look at their businesses and their budgets and their cash flow projections, looking into a typical year at the beginning of 2020, only to find out that the economy was going to change drastically and your operations were going to change. And so it gave the banks may have requested from their customers that they would provide a cash flow projection to see exactly how the COVID-19 pandemic was going to affect, and to see whether you were going to be able to maintain your business at a break-even point, or what changes might need to be made so that you can operate, continue to be profitable, or at very least break even. Thirdly, if you need to plan for large expenditures, such as equipment purchases, or as I mentioned, to move to a new location, a cash flow projection is the perfect tool. Similarly to that, if you have a seasonal business with large inventory purchases, a projection can help you to have cash on hand to make large inventory investments when you need them. Continuing on cash flow projections and why you need them. A cash flow projection allows you to track liquidity when accrual accounting masks cash realities. So as I mentioned, when I first look at a profit and loss statement, it would be easy for me to look at that and just kind of assume I understand the business, but there are going to be some expenses there that may have been adjustments from previous years. There may be swings in inventories or personal notes that might not necessarily have been a cash purchase, but it will affect your net income. A cash flow projection will allow you to understand which of those expenses might be accrued that aren't going to have an impact on that cash flow. Cash flow projections help you to see cash status of your business right now, and also to plan for the future, to see if you're going to make an expansion, if you're going to move locations, whether it would be in your best interest to do that now, or perhaps to plan that further on in the future. A cash flow projection is also a good way to prepare and plan for financial needs, and is often required part of a business loan application. So as you begin to reach out to banks to open a line, or perhaps to renew lines, existing lines, refinance debt, right now interest rates are extremely low, so many businesses are looking at renegotiating some of those interest rates. The bank is going to need some of this information. They're going to want to understand your business better, and understand also that you have a good control of your business. You know what you're expecting. You're prepared. You have plenty. You understand your cash reserves, or your need for those cash reserves, so that you can continue to operate that business if there are some unexpected expenses that you're ready and prepared to adjust as necessary. On page 20, we see an example of a cash flow projection. This one is a month-to-month cash flow projection. The first category there's a couple of examples. The first set of rows is titled Sources of Cash. These include or allows you to document all sources of cash incoming into the business. This includes primarily cash from customer sales, interest earned, loan funds, and current checking and savings account balances. The second category is going to include all operating expenses, or this is expenses used to run the business. This will include expenditures associated with day-to-day buying and selling process. Most of these expenses will show up on your profit and loss statement. Looking at some of those examples, you see wages, office expenses, and such. Those will all be included in the profit and loss statement. The third section are non-operating uses of cash. So these will be expenses that don't normally show up on your profit and loss, but will be reflected on your balance sheet. This could include income purchases, principal portions of loan payments, inventory, taxes, and owner draws. As we use this statement, what you would do is you would subtract your use of cash from your total cash available, and then at the end, you would have your ending cash for that month. Once you input that on, I believe, column number 3, once you calculate that, the ending cash for one month becomes the opening cash for the next month. You can change to page 21, please. Okay. When planning for your cash needs for your business, here are some strategies to create a positive cash flow. Positive cash inflows are driven, first of all, by increased number of items sold. So it might seem easier said than done, but perhaps you're evaluating your business and you see that you might have a cash flow or a cash deficiency. You might but see you have the availability to take on more inventory and sell more, or provide more services. The first way to increase and plan for increasing your cash flow is to increase the number of items sold. Secondly, increase the price of items. Perhaps you can do some research, check your market, see whether you're pricing your services or your products adequately, and if there's an opportunity to increase those prices, it may be beneficial for you to do that. Third is to reduce expenses. You might again evaluate and use that cash flow worksheet, and you'll be able to see where the majority of your cash is going, and that gives you an opportunity to evaluate to see if there's any way you might be able to reduce some of those expenses, or purchase a cheaper product, or find services that are more beneficial to sell those and to reduce expenses. Fourthly, change the timing of expenses. So cash flow not only monitors the amount of cash coming in, but it might also be impacted by when you're getting that cash. So if you're providing services or you're selling a product and you're offering terms, and so you're receiving that or you're selling that product and your accounts receivable are increasing, you might be profitable, but that's not benefiting your cash inflow, and it may be a burden on your cash inflow. A way to increase your cash inflow is change the timing of expenses going out as well. Maybe you're buying the inventory for cash and you're selling it on terms. You might be able to approach your vendors and see if they'll provide you terms so that you can change the timing of those expenses, or maybe push those expenses off later. I'm very particular. When I get a bill in the mail, I want to pay it that exact same day, even if it's not due right away. That's a cash outflow, but for your business, it might not be beneficial if your bills aren't due for a couple weeks. You might be able to send that check in or pay it online on its due date. That gives you the opportunity. That cash is sitting in your account, and you're able to gain interest on it. You're able to use that cash for other purposes and still be able to make those payments as required by changing the timing of those expenses. Finally, on this page, you can save money to have sufficient opening cash to get through the startup period. So the startup period is going to be the toughest time for your business. There's going to be a lot of unexpected expenses. There's going to be a lot of startup expenses. And so as you use that cash flow projection and that cash flow statement, you can monitor month by month. If you do have surpluses of cash that you might not need to take a draw immediately, you could save that cash so that you have a adequate cash reserve for some of the lean months. This is particularly beneficial if you have a cyclical business, and so you have several months where you have a surplus of cash inflow, rather than just using that to expand or continue to use that in the business. You might want to move that into a savings account or use that in a cash reserve, so that when you get to the lean months, that you have sufficient cash to carry you through those times as well. Okay. On page 22, we continue. Page 22, we continue on to number 6. You could obtain sources of cash other than sales. The example there is cash or a line of credit, or very similar to that is for smaller businesses. If you don't have a line of credit, is a credit card. So rather than waiting only on your accounts receivable to come in or cash from sales, you could utilize a line of credit, and you're using the bank's money to operate your business. And so, especially if you have any trouble with timing and receiving your cash in, you could rely on that line of credit, and then once the cash is collected, you could use that cash to pay down your line of credit. This is beneficial again if you have your cash invested in inventory, but you have other expenses that you might need to continue to operate your business, and you have a tight budget. The line of credit can be very beneficial to you. Number 7, reduce or change timing of owners' draws, particularly for most businesses. You'll operate on a fiscal year from January 1st to December 31st, and a lot of people will take their draws at the end of the year. Typically for 2 reasons. That's likely when you'll be planning for any tax liabilities, cost of living expenses. You take that. It may be beneficial for you to not take that at that time, especially again if you're on a cyclical calendar and you have less business towards the end of the year. You might need to keep that cash in the business to operate through that, and change the timing of your owner's draws to where you may have a larger cash surplus, and it's not going to put such a strain on your cash flow. Number 8, buy inventory from vendors at a lower price. It seems obvious, but there's a lot of ways in which strategies in which you can approach this. Sometimes vendors, again, they're in a very similar situation you're at. They're very concerned about their cash flow, and they may provide preferred terms if you pay in cash, or if you pay reduce the amount of time that you're utilizing their accounts receivable, and for you accounts payable. If you pay it sooner, they might provide a discount, or they might provide you preferred terms. That's a way in which you can reduce the price of your inventory. Number 9, obtain credit from the vendor. Some vendors, again, will provide preferred terms, and it won't make a difference whether you pay all up front or whether you pay in 30 days, 15, 30 days, 20 days, whatever that might be. That is a way in which you're using their line of credit to benefit your business. And then finally, establish policies to get paid sooner by customers. As a new business, you might need to exercise and provide some terms so that you're increasing your sales. That's going to be your number one priority, but that's also going to be an expense on your business. If you begin to establish policies to get paid sooner, this could be as simple as yourself providing preferred terms for people who come in with cash, not extending out your receivables to where you're waiting on those checks to come in or those credits to come in before you can do that. If you could receive the cash when the inventory is going out, that's going to benefit you the most. So it would be your best practice to begin to establish that policy right away. My father ran a business for several years, and some of his worst customers were family, because they knew, well, you know, it's family, we'll pay you when you can, and then that just creates an opportunity for those accounts receivable to be extended out further than he would for any other customer. So be careful of that. Try again to seek a way in which you can receive that cash as soon as possible. Okay. And that takes me to the end of my presentation. Any questions on cash flow or anything, perhaps any examples of what some of your businesses might be using to get that cash sooner?
You can also place your comments in the chat box as well. Great, awesome information. Thank you so much, John. And so we're going to move on to Michael. He's going to talk to us about a profit and loss.
Hi, can everyone hear me?
Yes.
Great. Hi, my name is Mike. I've been with the bank for about 6 months. I'm a data analyst on the product team. And yeah, here to talk about profit and loss statements. Now, the profit and loss statement is the best tool for knowing if your business is profitable. Basically, it's just arithmetic over any period of time that you want to look at, a month, a quarter, or a year, and it'll help you determine whether or not you've had if over that time period you've made money or have incurred a loss over that period. So the most important part about this is, the most important financial management report is the P&L statement. It's going to reflect your business decisions on the basic buying and selling process, and it'll tell you how you're managing your business and help you grow your business as well. So on slide 25, thanks. So again, it's a little bit of arithmetic. You start with sales, the amount of money that you are taking in from selling your product or service over any given time period, a month, a quarter, or a year. And from that, you subtract your cost of goods sold, sometimes referred to as COGS. This is the total expenditure of inventory items which customers buy. It can includes the purchasing of items, freight, manufacturing costs, modification, and anything that you do as a business to modify that, right? It's expenses incurred by the business. For services, it'll include labor and material, transportation, things like that the business incurs. Performing the calculation starting with sales and subtracting out the COGS that get you to gross profit. Now, from the gross profit, when you subtract overhead, that's the business expenses associated with your ongoing operation that gets you to your net profits. And net profit's what is left over to pay for expansion, equipment, loan payment, and then taxes, and ultimately the owner's draw. Let's see. That was actually on slide 26. I forgot to tell you to skip. That's my bad. This is my first time doing this.
No problem.
If anyone can't tell. Anyway, but on slide 27, we've mentioned before how it's really important to invest in a financial management or accounting software, and how important it is not to use paper to track any of these numbers. All of these accounting softwares will be able to compile this for you. You're not going to have to do much work except for the inputting of the information. So the accuracy of the P&L will depend on the accuracy in which you input your data. Tracking this regularly will help you get a better understanding of how your business is going on a month-to-month basis. If you're on a monthly basis, you'll have a month-to-month kind of feel as to how your business is performing. From my own personal experience, I work with spreadsheets and data very frequently, and I also know how easy it is to make mistakes when you're inputting data. So as you're inputting this data, the more closely you pay attention to it month to month, or any like or maybe more frequently, to keep an eye on those data inputs to make sure they're going to the right categories, that you're selecting the right drop-down menus. It's really important, because a common saying is the garbage in, garbage out when it comes to data. So making sure that you can accurately input everything, that you're not getting to the wrong rhythm of assuming one is one type of expense when it's a different, will be key to making sure that your profit and loss statements are accurate. And then if you're running it on a monthly basis, just being able to understand how one month outlier could mean you need to go back and reevaluate some of the inputs. And yeah, that's the gist about profit and loss statements. After the workshop, we do have a sample in the participant guide with some examples as to where things fall into where certain expenses will fall into categorically and such. So that'll be a good resource to check out. And yeah, that's the end of profit and loss statements.
Great. Thank you so much, Mike. And so we're going to move over to Miguel because we are running out of time. And he's going to talk to us about business financing. Hi, Miguel, I'm not sure if you're muted. Okay, I'm not hearing from him. So we'll go ahead and move on. The business financing is inside of the participant guide. And so if you are looking for financing, or looking into getting a line of credit, or any type of business banking products, please reach out to us. You can actually contact Sandra if you have questions, and then Sandra can send us the questions, and then we can send you over to the right person to answer your questions if you're considering lending to help support your business. So one of the things I would like to do to conclude our workshop is to go back to the test your knowledge. And we're just going to quickly go over some of the questions and the answers to those questions. One moment, let me pull that up. Okay. So the first question is, which of the following are reasons for good financial management? So select all that apply. So all of these apply, which helps to show which products or services are profitable. Also provides information on the size of a loan a business can afford. Also helps in deciding what inventory a business should purchase. It is also a tool for planning to reach new markets. Second question is, new businesses should start financial management with what? Does anyone, well, the answer is here. So I wasn't sure if everyone got this answer right when they looked at the sheet before we're revealing the answers. So the answer is, you should start with a budget. And one of the tools that I use personally and for business is I started off using Excel to do some manual checks on myself. There are also some free accounting software available. I know that the most prominent one is QuickBooks, and they also offer tutorials through QuickBooks as well. Number 3, sound bookkeeping is the basis for all financial management, and that is super true. Number 4, when business owners pay themselves, it is called an owner's draw. Number 5, what is the definition of cash flow? So the answer is both B and C, sorry. Moving cash in and out of a business, and also balance of cash received less the amount of cash paid out over a period of time. Number 6, which of the following is a good use of a cash flow projection? So it would be setting sales and expense goals, determining the break-even point for a business, planning equipment purchases, and tracking liquidity. Number 7, what is the basic formula for a profit and loss statement? So it'd be sources of cash minus operating uses of cash minus non-operating uses of cash, which equals your ending cash or your net cash. And I'm sorry, I went over the wrong one. The answer is B, which is sales minus cost of goods sold equals gross profit minus overhead equals your net profit. Number 8, for most small businesses, debt financing comes from owner or family savings, and it is frequently the only source of funds for startup small businesses. And so that answer is true. Number 9, which of the following might be an element of a small business loan package? So it would be all of these, which is business plan, business financial statements, business tax returns, credit report, collateral, personal financial statements, personal tax returns, and purchase agreements. And number 10, of the following financial management statements, which is the most important? So the answer is the profit and loss statement. So for best practice, it's always useful to really take a deeper dive into inputting your information into the profit and loss statement. There are several examples out there on the internet that you could use. There's also templates inside of Excel. And that concludes the portion of the test your knowledge. And again, if there are any questions, you can place them in the chat box. And if we aren't able to get to your question today, we can email you an answer back via email.
Yes, I would like to take this time to say thank you to every representative from Bank of the Sierra. You guys did a wonderful job in today's presentation, and all of the tools that were provided to the business owners. And you guys went right into providing examples as to, these financial statements that you hear constantly, right? Like your balance sheet, your profit and loss, cash flow projections. I myself am guilty of, sharing with business owners, this is what you have to get done, but it's like the step-by-step on how to make it happen. So thank you for the valuable tools presented today. There is a question here on the chat box from Miss Cindy, and the question is regarding, the question exactly says, regarding owner's draw versus payroll. Her understanding is that LLCs cannot do owner's draws, and her question is that correct? So Cindy, you can also ask your question live if you like. Thank you.
Great question. Would anyone like to answer that question from our group?
Hi, John. I think you're.
I think is he muted?
Audio.
I think he was trying to answer. One moment. Okay. John, were you trying to answer the question? I believe you're muted. Don't you love the virtual environment? Oh, I can't hear you. You're muted.
Type it out, John.
Probably the audio connection. You could type the question or you could type the response and we'll read it out loud. Thank you, John. Anyone else has another question? We have time for 1 or 2 more questions to ask live. And I also want to take this time to remind everyone that if you RSVP through our website, you have already received a copy of the participant guide. If you would like me to send it right now in this moment, go ahead and leave your email on the chat box. I'll make sure that you get a copy of the participant guide.
Great. And yes, we will provide an answer for the questions. I'll email the answers over to you so that that's a great question. From my understanding of LLCs is that you can take a draw. Well, it's a partnership, so it depends on how you set up your partnership. Normally I've seen the draws when it's an S corporation or a C corporation. So with an LLC, I think it's kind of similar to being under Schedule C almost, to where you can take the draw. You just want to document how you're withdrawing from your business. So.
Thank you. I think I still need to, I'm just in the process of setting up my business at this point. So that's kind of where I'm at, deciding if it's, you know, where I'm starting at. But thank you. I needed to know that.
Yeah, great question. Yeah, it's definitely trying to figure out the structure of your business for you, depending on where you're at, as far as the performance or progress that you've made in your business should determine how you should set it up. So for me, I've had a few businesses. So I had a loan processing business a while back. So I did set it up as a Schedule C until I was able to get enough business in. Then I changed it to a S corporation, and that was based on the advice from my accountant, which made sense because I had to pay payroll. But when it was just me, just by myself, I just had it as a sole proprietorship, to where I was only really paying myself. But he advised me, since I was bringing on processors or people that I have to pay, it was best for me to change my structure into a S corporation.
Yes.
So that's another thing you need to consider if you're bringing on other people that they're going to be hiring. So
That's also a big part of it too. I'm actually kind of working with the Berkeley Law. Yeah, because kind of the business that I'm getting into is a little bit new. It's only about 2 years out there. So there's not a lot of regulation and policy on it. And I don't want to jump in and not be, you know, protected. So that's definitely a big factor in setting up this business.
yeah, my advice is definitely seek the advice of an accountant or CPA.
Yeah.
So that you can kind of figure out your tax structure.
Yeah, that's my next
very
one.
important. So you need to know that up front. That was definitely one of the key advices I got when I first started my business a while back.
I've been there before with the IRS, so I don't want to go there again. I used to own a business a long time ago, so I know, been there, done that.
Great.
And regarding CPAs, any advice as to how individuals that once they've reached that capacity in their business that, you know, they're ready to work with a CPA, any advice on how they should go about connecting and being on board with a CPA company?
Yes, absolutely. From my experience, I actually did some research on a couple of CPAs and to make sure it was a good fit. And a lot of CPAs are selling other things, other products too. And if you're starting out, you're trying to save every penny that you have for your business. So just get the core items that you need as far as the software. something that you can do on your own, because you need to know where your money's going to, what's going in and out. A lot of the CPAs have their own bookkeeper that can assist you, but you still need to know how your money's flowing in and out, and getting into the practice of understanding your projections and understanding where the money's going to come from. So definitely check out a few. I mean, there's a few that are in the Fresno area that that are reasonable. So definitely want to check around for pricing. So some of them have really good different type of programs that you can use. But yeah, definitely check out a few.
Definitely. Thank you. Thank you for that advice. And I think that is the last question on the chat box. I don't see any other ones. But as mentioned, to say thank you once again for the time. Thank you to each participant that has joined in today's call. We appreciate your time and being part of this important financial management webinar. And let us know in the chat box of future topics that you would like to see. We're starting to program our calendar year for 2022, and we want to make sure that each one of you receives the tools and the resources to continue the success of your business. So thank you, everyone. Thank you to all of the team members at Bank of the Sierra.
Thank you. Bye-bye. Have a great evening.
Thank you.
Thank you.
Bye-bye.